Welcome back. Earlier today, building permits were released. Building permits are issued in thousands, seasonally adjusted, and they are one of the best, I think, leading indicators that speak to the strength of the housing market. We also have an update to yesterday's business applications. That in just a moment. Building permits here, total units year over year down 3%. 5 units or more, and then again, this is year over year down 18%. Single family units up 7%, and those units 2 to 4 up 16%. So we see a big drop in the 5 units or more, but this is actually not so new. The 5 units or more is the red line, and we can see it's down 18%, but it's actually an improvement from what we've seen in prior months. We were down around 32, almost 40% at one point just a few months ago. By the way, the white histogram bars, that's the S&P 500. This is as of August. This reports the August data, so we wanted to match up S&P for that period of time. And there's a pretty strong correlation. We can see when stocks move down, building permits move down. When stocks move up, they move up as well. Again, building permits can be an excellent leading indicator because before a home is built, the builder has to go out there and get the permit, and the permit usually predates the construction by quite a bit. So we look to building permits as an indication of what home building may look like in the months and years to come. 2 to 4 units is up the most. That's the yellow line, followed by the green line, single family units. It looks like it's correlating with a stronger stock market, at least as of August. Now, go back to 2006 through 2010. We can see during that period of time, specifically 2007, we know it's a very strong housing market. The 5 units or more, that was around 20% year over year basis. The 2 to 4 units, that's the yellow line. That was a little bit negative. It already started to turn. What's amazing is that in 2007, the stock market was making all time highs. The building permits are already in negative territory. This is the zero line. We were already in negative territory even in 2006. So if we see building permits turn negative while the stock market is still strong, we should be wary of that. And of course, when we hit those very big lows of the stock market, March of '09, building permits had already started to turn to the upside. When there's the anticipation that the economy will turn and we want to build a house or home builders want to invest, they're going to take out the permits way before we may reach a bottom. The blue area chart in the background, that's the S&P 500. This is 2006 through present day. The white line represents the single family units as a percentage of the total. The red line is the 5 units or more as a percentage of the total, and the yellow are 2 to 4. Exclude the 2 to 4, it's a minor component. If we take all the building permits and we look at, what consists or what comprises most of this, it's either single family or 5 units or more. 5 units or more family, uh, construction, so to speak. And we can see during strong periods of time, let's say 2006, we saw that the 5 units or more went to the upside as the single family units went to the downside. But don't, let this deceive you. It's not necessarily that single family units were going down. It's just the overall percentage of all building permits more so lean towards the 5 units or more. This, I would say, is the professional investor, so to speak. These are the professional home builders as opposed to the single family units. So we can see when the economy is strong, we tend to see the professionals really get on board. Same thing holds true with zero interest rates in 2015. More recently, we see the single family units represent a greater percentage of the overall construction, the overall building permits. That might not be so encouraging. We'd like to ask why the 5 units or more component is not as strong. It has been strong in the past when there has been a strong economy. Blue area charts the S&P 500. This is 2000 through 22, and we can see single family units versus 5 units or more. And these are the actual numbers over here. We can see the single family units are rising while the 5 units or more are decreasing. And this flies right in the face of what we saw 2005 when we saw quite strong single family units and 5 units or more, but the single family units really fell to the downside. And that, that really represents, I think when we look at the single family units, we think of more the individual investor, the individual home buyer, and they're much more sensitive, I would say, to interest rates. Of course, all builders are sensitive to interest rates, but the single family much more. Now, we take a look at the black area charts, the S&P 500. This is 2005 through 2007. So this is again the financial recession of that time. The white line is a single family units based on the percentage of its 1 year max. So when the white line is near the high in 2005, it shows us that that was the highest high for 1 year. It was at trading at the 100% capacity, so to speak, of where it historically had traded for the past year. 5 units or more in red, the green 2 to 4 units. Now, what's interesting, the stock market again was trading right near the highs, hitting all-time highs all the way through late '07. But look at how the single family units already pulled back. By late 2006, the single family units were only at, it's not trading, but they were calculated at 70% of where the max was, so to speak. So it really does demonstrate, at least during that period of time, that building permits had already pulled back way before the stock market had pulled back. The stock market again was hitting all-time highs all the way through late '07. But early in 2007, late '06, the building permits had already turned to the downside. Well, this is where we are now. The white line again, single family units back up to its yearly highs, along with 2 to 4 units, 5 units or more. Remember, that reflects more the professional investor. That still has not come back. When we talk about the housing market, of course, there's an issue called the lock-in effect, where potential sellers really don't want to sell because if they sell and they want to buy something else, they're going to roll themselves into a high interest rate mortgage. So it's creating a real lack of inventory for homes. And I think that's why the single family units is really at the high. There's demand for the single family units. Why is there not as much demand for the 5 units or more? Well, I think the builders and especially the investors for 5 units or more, a little bit more of a sophisticated investor that also has more time. An investor can sit on the sidelines. If an individual family wants to buy a house, it seems to be a lot more of a timely decision. It has to happen now or very soon. The investors can wait. And I think the investor class, the 5 units or more, they're really waiting for maybe lower interest rates for the market to maybe present a better situation. Now, over here we see in the white background a white histogram chart. That's the S&P 500 as of August, registering higher highs. And again, this is where we are now. The 2 to 4 units, that's the yellow line. That's a year over year, almost 20% up. The single family units, the green line is around 5% roughly year over year. Again, the 5 units or more, the investor class is in negative territory. We're really seeing a pullback in the 5 units or more. Those are the larger investors. Of course, they're also sensitive to interest rates, but they have more time on their hands and they're willing to wait for better conditions. And I think I would say that this is a troubling part of this report, is that the investors seem to be sitting out this housing markets, at least as far as building permits are concerned. Now, yesterday we spoke about business applications. This is an update. We had a great question that was posted asking for a little bit more clarity in terms of, let's say, the average of all business applications, as well as correlations, which we're very interested to talk about all the time. Now, business applications again are filed in order to receive an EIN, Employee Identification Number. This is compiled by the Census Bureau. Essentially, when we start a new business, we need to go to the IRS and ask for a tax ID. So the applications for tax IDs can be very indicative of where people are opening new businesses. Well, on a year over year basis, this is this month's report. This is what we spoke about last night. Retail trade up 18% year over year. That's this August compared to last August. Accommodation, hospitality up 13%. Transportation down 9%. Now remember transportation. We're going to talk about that in a second. Construction up 13%, utilities down 20%, mining down 28, healthcare up 13. The strong parts of our economy, at least from the view of business applications, where are people trying to open up new businesses? Where do they see demand? Healthcare, construction, accommodation, retail trade. Where is there a lack of interest to open up new businesses? Mining, utilities, and transportation. Well, here's a really interesting chart that shows us the black line is the S&P 500. This goes back 8 years. It shows us from 2015 through present day. Shows us the S&P 500. Now, all of these represent year over year returns. So we see, for example, it's actually kind of interesting. We had a very low interest rate environment. Now we know the stock market was, chugging along, making higher highs. This is on a year over year basis. So, that's why it's more of a horizontal chart. But what we see over there, what was not working? Mining at the time. Well, we could, maybe say that mining was not doing well because the economy was very strong and there was a lot of investment in other areas, and maybe, people didn't see as much of a need for gold and silver. Perhaps that's the case. What was very strong? That light blue line, that's utilities. Also, the brown line over here, that's average. That's the average among all business applications. Well, as we chug forward, 2017, 2018, conditions continued to improve. Mining turned to the upside. Maybe some investors were starting to, sense a change in the trend, and they're going to invest more in safer security, so to speak. Then we see the COVID crisis, 2019, 2020. Mining moved to the downside. We see the utilities move to the upside. Utilities are considered more of a defensive position within investments. But then we see the recovery. This is most interesting. The dark area chart, that's retail trade. Remember, post-COVID stock market crisis, which was March 2020, we saw a lot of investment and a lot of interest to get the people back into the stores. Low interest rates, lots of stimulus. Let's go shopping. Well, retail trade, lots of new businesses were open in retail trade. Maybe that's because a lot of businesses were lost and maybe a lot of new businesses, were started to, take their place. The orange line also, that's a dark orange part over here. Accommodation as well was also very strong. We came back. Now, this could be a year over year comparison to where we were in 2020. Remember, all the hotels were closed in 2020. So maybe this orange spike just reflects, you know, April of 21 compared to April of 2020. Maybe that's the case. But what's most interesting, fast forward to present day, what seems to be, at least as of late, working well? Utilities. What seems to be not working so well, mining. Now, also transportation. It's difficult to see, but it's really kind of treading water. But we see defensive positions in mining. We really haven't seen a lot of movement in gold and silver lately. I know there's always anticipation when there's a tremendous amount of, surplus of money out there, M2, so to speak. We see gold and silver go up. But we spoke about this not too long ago. M2, liquid assets, are actually declining. And maybe that's the reason why mining is not doing so well. Maybe there's just a perception that there's less uh, dollars out there, so to speak. When there's inflation, at least in terms of money supply, we tend to see gold work better. But most interesting, we see over here, the blue line is average business applications. The black line is the S&P 500. A pretty strong correlation. It really does make sense. Take a look at 2021. This is post-COVID crisis. S&P 500 makes a nice recovery again on a year-over-year basis, along with average business applications. It really does bode true. Now we know S&P 500 are, made up of publicly traded companies, and EIN applications, I would say for the most part, are private companies, excluding trusts and estates. Those are not included. But nevertheless, there is a strong correlation. What's good for one side of the economy is good for the other. Now, fast forward to present day, S&P 500 we know has not been doing so well, at least over the past couple days, and average business applications have been down as well. In fact, we're trading right near the lower end, almost at a 0 point, so to speak. This is the 8-year correlation between the different sectors of business applications. What type of business application seems to track closest to the S&P 500? Well, we took 8 years of data and put it together. Retail trade, 25% correlation. Now, when we have a perfect correlation, when one index moves 1 point and the other moves exactly 1 point, that's a 100% correlation. When they move in opposite directions, we have a negative correlation. A zero correlation means no connection, no relationship. But when we have a 49% correlation, it's actually pretty high because it's on the scale of negative 100% to positive 100%. So the accommodation sector is quite strong, but by far the strongest correlation is transportation. The transportation in terms of business applications, think of those businesses out there that specialize in transportation. That seems to have the strongest correlation to the S&P 500. Is that related to the fact that transportation is needed to transport goods and there's so many delivery services out there these days? What do you think? It's a good question, but transportation seems to be most closely related to the S&P 500. Well, you may ask, what does a transportation business applications look like right now? Black line's the S&P 500. This is 21 through present day. The blue histogram bars show us business applications. Now, this is not year over year. These are the actual numbers. You multiply this times 1,000, by the way. But on the left-hand side, we see here business applications around 33,000. Is that a lot? It's the second lowest number we've seen in a long time. Business applications were above 42,000 at 1 point. This is 21. But as the S&P 500 has moved down, and we can see why there's a 62% positive correlation, business applications in the transportation sector. This is, by the way, transportation and warehousing. That's the entire sector. Well, the stock market went back up, and the transportation and warehousing sector did not. Question is, what's going to turn first? Because if history's any judge, if one index moves in one direction, the other should follow. Uh, Tell us what you think, but so far, the strongest correlation to the S&P 500 over the past 8 years, that's a lot of data, is the transportation and warehousing sector in terms of business applications. Those individuals and companies that file an application for a tax ID to open a new business, there doesn't seem to be a lot of demand. Maybe that's because of high interest rates. Maybe that's because of high oil prices. Maybe both, and maybe a lot more. We have Federal Reserve meeting coming up very shortly, and we'll be sure to update you with any significant changes along the way. We hope this has been helpful. We look forward to seeing you back soon.